doing a market review for my YouTube channel. Can you provide me with a prompt for how I should structure this video?
Sure. Try this structure for your YouTube market review video. Start with a hook, like a quick stat or question about your niche. Then, dive into the current trends. Maybe highlight one or two big shifts in content or audience behavior. Next, break down your channel's performance: views, watch time, subscriber growth, and engagement metrics. Compare those to competitors or similar channels, but keep it concise. Offer a quick takeaway or action plan for viewers, maybe a tip or two they can apply. Wrap up with a call to action, like subscribing or commenting. Keep the energy upbeat and add visuals to back up your points. Sound good?
That sounded terrible. Mic check, mic check, mic check, mic check. All right, sounds good.
Awesome. Go kill that video.
All right, welcome back to the channel. This is Trader Danger. My name's Anthony. Coming at you with the NQ market review for the 3rd of February 2026. So we're looking at our daily chart on NQ. There were 3 PD arrays that I was focused on going into today's session. We have this buy side here, and this sell side here, and then this suspension block. As you can see, we formed a daily swing high after taking buy-side liquidity into a premium fair value gap. My initial bias was undetermined going into the session. The level I was most interested in was this suspension block consequent encroachment. The interest rates did come in even last week, which did have me leaning slightly more bearish, but for the most part, I was undecided. All right, here's our 6 a.m. candle here. 4-hour chart. Here's our new week opening gap. The sell side from the daily chart. So around 7:30 a.m. when I approached the charts, we were printing this candle here. And I noticed that we were forming a 4-hour swing high here. So I went ahead and measured this wick. And you can see how price, how price failed to trade to consequent encroachment, the midpoint of this 4-hour wick in the 10 p.m. candle, the Asian range. So this London 4-hour candle, I was looking at as a potential high of day. And I was not expecting this New York AM 6 a.m. candle to trade up into this consequent encroachment of this wick. Anticipating a 4-hour swing high. Down to the 1-hour chart, we can see this is that for the 4-hour wick here. We formed a 1-hour swing high. And we formed another one at 8 a.m. inside, in between the low and consequent encroachment of that wick. Let's drop down to our 15-minute chart. So you can see we have this fair value gap here. And here we have a clear market structure shift on our 15-minute chart with an inversion fair value gap. We shift in structure, trade lower, trade back into it, form a 15-minute swing high here. 8:30, we wick, tap the low of this 15-minute fair value gap, and then inverse this gap here. So my entry today was right here on the close of this candle, which confirmed this 15-minute swing high inside this 15-minute inversion fair value gap. Our midnight opening price is this suspension block consequent encroachment. It overlaps it. If I show you guys here, midnight open right here. So you can see we had this Judas swing in the London session above midnight open, shifted in structure lower, came back up, formed another 15-minute swing high inside that 15-minute inversion fair value gap. And this is where I pressed the button to sell. I'll show you guys my executions. Right here. We entered again here. We took our profit here and then more inside the new week opening gap.